Welcome to our explainer series on the option Greeks. My name is Jason, one of the instructors here at TD Direct Investing. All right, off we go. The Greeks help option traders understand how changes in different market factors impact their premium and can help them manage their risk. In this video, we're going to be unpacking Vega. Check out the rest of the series for the other three. Volatility is an important component of an option's extrinsic value. When the market expects a higher likelihood of pricing uncertainty, there's a greater chance a stock's value will change, creating more risk for option sellers that they need to be compensated for to make placing their trade worth the reward. Or from the buyer's perspective, it's increasing the probability that further out of the money strikes will expire in the money. Vega itself tells us how much an option's price should change for every 1% move in implied volatility. Let's walk through an example. If IV increased by 1%, simply add Vega to the premium. Since implied volatility is, volatile, it's not uncommon for it to move in larger chunks. What if it increased by 15%? Using the example on the screen, take the 165 calls with a Vega of 26, multiply it by the change, and this tells you the option premium will increase by about $3.90, really demonstrating how option premiums can move even without much change in the underlying price. Volatility can also be a factor when choosing your strategy. Long options, like buying calls or puts, generally benefit from rising volatility because premiums expand, while short options usually benefit from falling volatility because premiums contract. Now, one of the biggest real-world examples of Vega in action is around earnings season. Implied volatility often rises before an earnings event and collapses afterward. This phenomenon is often referred to as vol crush and can be a major profitability factor, sometimes larger than the price of an underlying stock in the near term. Using the example on the screen, when we move from an unknown to known after an earnings announcement, we can see that vol crush has an outsized impact on the premium. This fact is one that makes trading options around earnings a higher risk proposition. Now that we've walked through what Vega is all about, let's see how we can use that knowledge in our platforms. From the option chain here in WebBroker, to see Vega along with the rest of the primary Greeks, simply click the plus button next to analytics. This will load up, change how the option chain will look and feel. Calls will be listed on the top, puts will be listed down below. Once this loads for us, what we can see is Vega along with the rest of the Greeks, as mentioned, is now listed on the right-hand half of the chain itself. Key note here, implied volatility has also been added into the chain. It's to the right of the asking price. If you're looking for a step up in technology with additional customization, you have a choice of using our advanced dashboard platform as well. The Greeks can be found by toggling down on the View drop-down menu, simply selecting Greeks, and there you have it. Delta, Gamma, and the rest of the Greeks, including Vega, are listed here on the screen. If you're looking to see where implied volatility is listed, also in the View drop-down menu, select Theoretical. All right, and you can see it listed second from the left. But one of the really cool features here, if you'd like to kind of customize this and create your own column sets to include whichever option pricing factor suits your need, you can click on the hamburger menu in the top left-hand corner, choose Manage Templates, and you'll be able to create your own custom experience. Now, one last tip to show everybody here, one that I really like, on this right-hand side, we've got just a simple price chart of the stock that we're looking at. If we change it from what's listed now as mountain chart to HVIV, this is a line graph of historical or delivered volatility and implied volatility. It's a great quick reference guide so we can see kind of what volatility environment we're presently in. All right, now Vega loves vol, IV up, premiums up. When uncertainty spikes, options can reprice fast. Keep an eye on implied volatility. It can be the real profit loss driver, even if the stock price barely moves. Remember, volatility is not directional. It's just the market's way of telling you there's a greater chance your stock's price will change. Happy trading.